All right, welcome back to Market Day Report. I'm Scott Schulte, otherwise known as the Cow Guy. It's maybe the black and white jacket that gives that away. I don't know. But let's take a look at what's going on in these markets. You don't really want to hear me talk. Let's see what the numbers are doing, because these numbers are your money. How about July corn down 15 cents? That's no bueno. 798.5 is last. Up, that's 8 cents off the lows. I guess that's the positive there. But even if you go out to the new crop East, we're off 14 cents to 737.25. Moving right along to see what the beans are doing in Chicago. Soybeans are 39 cents lower. Ouch. 16.45 3/4 is last, and that's about 3/4 cent off the low. So we're weakening as we speak. Going out to the new crop Nove, we lost that $15 handle handedly. We're at 14.87 3/4. That's down 27 cents. Chicago wheat. What's happening with that? That's down 4 1/4 cents in July to 10.51 1/2. That's pretty much in the middle of the day's trading range, but it's a pretty big trading range though, right? Deese is off 3 cents to 10.55 1/4. How about Kansas City? The hard red wheat in Kansas City, that too is off 8 1/2 cents to 10.97 1/4. Lost that $11 handle. But if you go way out to March of 23, you actually get a 1/4 cent higher. That's a little bit of a better board. 11.08 3/4. 1/4 cent higher in that March of 2023 when it comes to Kansas City wheat. How about spring wheat in Minneapolis? This is all up 3 1/2 cents higher in the July to 11.69 1/2, and we even have a 1/4 cent gain that March of 23, 11.45 1/4. And then lastly, this was a pretty good board last time we checked, and it still is 353 points higher to 149.16. And that cotton, that's July, and that's a good one to bring in our next guest analyst on. It's Todd Horowitz from Bubba Trading. He's in Chicago. Todd, I just rattled off a lot of numbers when it comes to the commodities. What are your thoughts here?
Well, I'd rather hear you speak than look at those numbers. But, look, it's not a surprise, Scott. We've got some pretty much wholesale selling in a lot of commodities right now. The dollar is skyrocketing at the moment. You see gold, you see crude has actually made a big rally back. I think it's just natural. I mean, if you actually looked at the technicals on those things, they're all in great shape and look like they want to go a lot higher. But we expect selling, and I think we get nervous by the bigger numbers. But remember, we're at much higher prices, so the bigger numbers are just in percentage basis, they're no different than they were before. And I think that this is what we have to always remember, is that it's a percentage basis of movement, and we're going to get some of these bigger moves. We got pretty thin markets and a lot of things going on that they're adversarial to markets and to the capital system. So we're going to see some of these moves that are going to show up out of nowhere. Plus, you got the Fed this week.
Do you think that GDP number was unnerving?
Well, I don't think so. I think it was more. I think the real people expected it. I don't think we're surprised. I mean, I think if you ask the average person on the street if we're in a recession or not, I think they'd say we are in a recession, just based on what they're paying and the lack of wages that they're making every month compared to what they have to spend. So, as we know, economists won't say it's a recession for 10 years from now, but I think we're in a recession right now. And I think the average American realizes that we have no growth and we have no desire to growth as the current administration sits, because we refuse to produce our best commodity, which is oil.
That's true. I mean, we've got a situation where real wages are going down. If you don't get if you're making $50,000 a year this year, if you don't get a $5,000 raise, you're out money. And that's just the bottom line, basically. So it's a tough road to hoe out there right now. Stay right there, Todd. We're going to go away. We're going to pay some bills. We're going to come back and talk with Todd Horowitz in Chicago about the livestock market next. There we go. Welcome back to Market Day Report. Thanks for tuning in. If you're just tuning in, if you want to get to know me a little bit better, it's not that hard. At Scott the Cow Guy, you'll see what I write. You'll see other things I do in media. But that's the best place to go, because that's where it's all at. At Scott the Cow Guy on Twitter. Come there, follow me, and we'll get this started. All right? Why don't we get these prices started, because that's what you're here for. Let's take a look at live cattle. They're higher today in that August contract. Let's go June. June's up $2.72 to 135.37, and that's only about 15 cents off the highs. That's good news. August is at 137 even, and that's 17 cents off the highs there. So a good, strongish live cattle board. I'll say strongish. How about feeders? What's going on there? And here we go. This one's going up like a homesick angel, as they say. Let's take a look at August. Is up $5.85 to 174.12, and that's close to about 35 cents, 40 cents away from the highs. Go out to November, 180.67. That's up $4.37. So that feeder board is strong. All right. Lean hogs. What do we have happening in the lean hogs? Well, we're rolling over a little bit. I'm not going to say this is a wholesale dump, but it's definitely trading easier. June's off $1.30 to 105.07. And that's a big range, 4-cent range or $4 range over there. So, and we've also got, say, August off 95 cents, lower by 95 cents to 108.70. And that gives me my next opportunity to bring in Todd Horowitz from Bubba Trading. He's in Chicago right now. Thanks for sticking around there, Todd. What do you think about these livestock? You like livestock?
I do, and I think that obviously crude was down huge this morning, and cattle was higher, and of course the corn is down, which is helping the feeders. I think there's still some trouble here, Scott. I think this ties back in the inflation conversation we started at the beginning, and I think as crude reverses, if it goes higher now, I think you might see some pressure, on the cattle. I mean, I think they should be fine, but again, at the end of the day, when it comes down to a budget issue at home, you got to pick your poison. And right now we're happier for the moment. Crude was lower, but again, crude has already climbed higher from being, it's really at about $5 from its lows. So we'll see if it has any effect. But I do think that the inflation story is the story for cattle. It's because there's only so many dollars to spend, and you got to figure out where you're going to spend it at.
Yeah, and that's true. And we've still got these issues with these lockdowns and these shipping lanes and supply chains. And I mean, I'm getting sick of writing about it myself, but you can't really get away from it. And if you see a picture of all the ships that are waiting to get into Shanghai, it's unbelievable. So those go ahead, Todd.
No, it's unbelievable. It is unbelievable, and it's again, it's a creation of our own problems that we created, and I think that's that's creating this giant inflation. And I don't know about your thoughts, but I think the Fed's going 75 basis points.
Wow, he's made a big call there. I'm still with 50. We'll see on Thursday. It comes on Monday, right? Or Wednesday? Sorry, Wednesday.
Yeah. Wednesday. Yeah.
All right, I'm going with 50. Todd's with 75. We'll put it on there. We'll see what happens. All right, thanks for being on the show, Todd. It's Todd Horowitz with Bubba Trading, coming to us from Chicago. I'll bring it back to Nashville so I can throw this back over to Janet.